Hello and welcome everyone. My name is Bobby Tulis. I'm from GFS, who provide multi-carrier parcel services across the world. I want to introduce you to Jake.
Yeah, hi everyone. This is Jake Estes. I work for Avalara, and we are a global tax software firm.
Great, thanks Jake. We're both here today to talk to you about how you can crack into the US e-commerce market. But before we get into it, just a couple of points. We are recording the webinar, so after this webinar, tomorrow in fact, you're going to get an email with a link to download the recording. And also, if you've got any questions, if you look on your screen on the top left-hand side, there is a Q&A box. So if you have a question, just type it into that and we will cover it off at the end. Okay, so without further ado, let's see what we're going to be covering. We're going to be looking at the US e-commerce market. I mean, it's easy, isn't it? And then secondly, we're going to be looking at online marketplaces, not suggesting for a moment that you're not selling off your websites, but online marketplaces are a natural stepping stone for market entry. So we just want to talk a little bit about those two. And then Jake, you're going to be covering number 3.
Yeah, U.S. sales tax. We'll talk about some legislative updates and what to look for when you sell into the U.S. when it comes to taxes.
And finally, something that's really close to my heart is how you get delivery and returns right for the US customer. So all about the delivery experience for your customer and also trying to get it right for your business. And then
we'll talk about some takeaways when it comes to shipping goods from GFS, and then we'll talk about things to watch for when it comes to U.S. sales tax and some ongoing compliance tips as well.
Great. So, US e-commerce market, it's easy, isn't it? Not really. When we look on the outside, what do we see? We see a country which has got similar culture, similar language. It also has a high threshold, so you don't have to think about duties and federal duties and taxes unless you're above $800. And also with a weaker pound, British goods are even more attractive to US customers. So it's hardly surprising then that in a recent study across 1,000 and more online UK sellers that we conducted with Tamebay, more than 64% of them stated that they saw the USA as the #1 e-commerce opportunity by far.
Yeah, and as you said, kind of jokingly, Bobby, it's easy as pie. Well, in fact, it is not as easy as pie, and governments are getting increasingly aggressive. The U.S. GAO, estimated a couple of years ago that state and local governments are missing out on a lot of taxes to the tune of up to $13 billion in revenue. That's a lot, and you see most states are in the red, and so they're looking for ways to recoup those taxes. And so it makes it very difficult for retailers to comply once they start selling in the U.S. And we'll go into some of this in a little bit, more detail in a few minutes here. But just some figures that stand out is that, the USGA also estimates that there's more than 24 billion in uncollected taxes in total over the last several years. There are more 45 states that have sales tax plus the District of Columbia, so technically 46 states. And within those states, there are thousands of jurisdictions that you might be dealing with, depending on your activity and what you sell. And sales tax applies not only to your online sales, but it is also to phone orders and sales through marketplaces and in-store sales. So any channel you sell through is going to be affected in some capacity in terms of the U.S. sales tax.
So talking about sales channels, one of your important routes for market has got to be online marketplaces in the US. Which is a great first step for getting into the market, but also gives you a great way to be able to test the market and balance, risk and cost. So if you want to crack the US e-commerce market, online marketplace have just got to be one of the essential parts of your sales strategy, as well as, selling on your website. But just some quick facts, Jake, I don't know whether you know this, but 61 of the top 100 marketplaces are all in North America.
I did not know that. That's interesting.
And another quick fact for you. Last year, $525 billion was sold on US marketplaces. So, it's really, you can't afford not to be looking at US online marketplaces as your route to market. Some of the advantages that we mentioned is low cost, low risk market entry. the customer comes to the marketplace, so as a seller, you have lower cost of acquisition. You don't have to be thinking about marketing and trying to promote your goods and services to bring them to you. The customers come to you on the online marketplace. The marketplaces as well are going to hopefully be able to provide you with some valuable insight and knowledge, not only about local customers in the US, but also about what products are selling on their marketplace, and insight which is going to help you as the seller be able to compete better on that marketplace.
Yeah, absolutely. Sorry, just to add to that, Bobby. I mean, the U.S. is more than 330 million people, and of those millions of people, many of them, well, actually a large percentage of them have a disposable income. And so when you're dealing with a market, almost the population of the European Union, it's more than likely you're going to have different channels you sell through, right? Marketplaces are probably one, but you're going to have your own website. Maybe you've got a brick and mortar store, or you take phone orders, things like that. So important to kind of create a strategy around all of your channels, not just marketplaces.
Yeah, absolutely. And like we said, as well as being marketplaces in particular, if one of your key points is going to be low, how do you balance your risk and your cost, then marketplaces are important for that. But also they give you that setup and go convenience and speed to market. When you think about marketplaces in the US in particular, it's easy to think only of the big players, Amazon, eBay, Walmart, Hauser. Those are the top 5. And they're important, but one thing that is worth thinking about is to also consider which are the other players in the marketplace. Maybe the ones that are not as visible, but are growing fast, could be a much better fit for your product because they're not sort of a jumble sell of goods on there, but they're more vertical marketplaces. And maybe somewhere where your products and services are not going to get lost in all the noise. So think about the smaller marketplaces as well, because that you're going to be able to sell more, but more importantly, you don't want to be putting all your eggs in one basket. So having working across multiple marketplaces is going to help you spread your risk as well as help you sell more.
Cool. This is Jake here, and as Bobby was talking about all these marketplaces, it's important to understand that no matter which channels you sell through, the U.S. government, the state governments are going to want to get their hands on the tax dollars that's owed to them. And so regardless of whether you're selling on an Amazon or a smaller, more bespoke marketplace perhaps, or on your own website, I'm gonna give you some considerations to take home as you start to sell or continue selling in the U.S. and build out that revenue stream. So a quick overview for those of you who aren't aware of what U.S. sales tax is. It's an indirect tax applied to the products of goods and services. Unlike the European Union and nearly every other government around the world, the U.S. doesn't have a federal sales tax. So the central government doesn't control the taxes like it does in the U.K. or Germany or Austria or anywhere like that. It's all decided by the states and the local jurisdictions within the states to set rules and legislation around the sales tax that they levy on businesses. So as it stands now, 45 states plus the District of Columbia, which is actually not technically a state, 45 states plus DC actually have sales tax. That means there are 5 that don't, and the 5 that don't, they get revenue from other streams such as property taxes, payroll taxes, income taxes, and things like that. But nearly every state has sales tax, and so within these 45 states, there are roughly 14,000 taxing jurisdictions, I should say. And within those 14,000 jurisdictions, there are more than 35,000 different rates for products, services, and rentals. So it's very, very difficult to find the right rate depending on what you're selling. Okay. Now, in order to determine when you have to register and file and collect taxes, you have to look at what your activity is. And so historically, if you know anything about sales tax, you've probably researched and found that if you have a brick and mortar store, or if you have an office, or you own a warehouse in a state, that triggers a tax obligation, and that's still true. However, states are slowly adapting to how businesses sell and how consumers purchase in 2019. And so states are introducing kind of experimental legislation. It's still legislation. You still need to abide by it, but it comes in the form of several ways. So You've got click-through nexus. So if you have a partner driving traffic to your website, and you pay them a commission or a click-through fee, that partnership, with that marketing partner in North Carolina or Idaho or Florida or somewhere, that can trigger a tax obligation where that marketing partner is based. So it's important to identify what kind of relationships you have with affiliates in the US. And this includes things like social media influencers, right? So Instagram influencers, if you've got, models wearing your bikinis or shoes or something, and, they're posting a link to your site on their Instagram profile, and that affiliation right there could also trigger a tax obligation. So what seems like sort of a casual partnership with someone to, co-market your brand with could actually, open up the floodgates, and open you up to a lot of tax exposure in the US. The products you sell, so if you sell an app associated with some of your property or software associated with it, that in and of itself could trigger a tax obligation. There are some states that have actually gone as far as to say that placing cookies on a customer's phone or desktop computer or laptop, that's a physical presence. And so when you save their password or their preferences or their shopping cart on the website, and it places that little file on there, that's a physical presence, right? That's property in the eyes of the state. And so what that means is that in a state like Massachusetts, you actually have to identify where your customers are in Massachusetts, that you have customers in Massachusetts, and then most likely get registered for sales tax. And states are kind of catching up to enforcing these kind of rulings as well. So what they're doing is they're going online, and they've got whole armies of people called nexus discovery teams. They're going online to your website. They're loading up a shopping cart, putting in a U.S. address, and seeing if you're charging sales tax. They're requesting trade show attendee lists. So if you go to a retail conference, for example, in Miami or Los Angeles, San Francisco, wherever, there are some states out there that are actually requesting the attendee list. So they can go through the list, see the name, see the business name, and see if that entity is registered for sales tax in that state, and then call you up accordingly, right, if you're not registered there. And the last point here I'm going to make is about economic nexus, and this is a very important one. If you've followed any of the U.S. news, the tax news, I guess, in the last year, you probably have heard of what's called the Wayfair Supreme Court ruling. So I'll give you a quick recap of that. I'm not going to go through all of the ins and outs of the case, but just at a high level, what you need to understand about this Supreme Court decision and how it impacts remote sellers. So this ruling was passed down in June of last year, and essentially it overturned a 26-year-old Supreme Court ruling that said that now states can tax out-of-state sellers based on simply their economic activity. So essentially what the U.S. states did is that they looked across the pond at what we do over here in Europe, in terms of distance selling thresholds, and they said, hey, that's not a bad idea. Let's try to implement it ourselves. And when they first tried to do it, the Supreme Court said it was illegal. The lower court said it was illegal. But then as time went on and more states fought this, the Supreme Court ultimately overturned this decision and said, okay, fine, states, you know what, we've looked at how businesses operate today, how consumers purchase, and you're allowed to now implement economic nexus. And what that means is that for a business that makes deliveries into a state that's not their own, they have to account for what their sales were, both in revenue and transaction volume. If they breach a certain threshold, they have to register for sales tax. It does vary by state, these thresholds, but generally speaking, most states fall in the line of about $100,000 in sales or 200 separate transactions or deliveries into the state. Okay, this applies to not only sellers of taxable property, but also non-taxable property. The state still needs you to report on that. Some states provide some leniency there, but it does apply to nearly every transaction that falls within U.S. borders. So very important to identify what kind of sales volumes you have in each U.S. state that has this legislation. Which brings me to my next slide, and this is actually a map of the U.S. And you'll see that the blue states here are states that currently have economic nexus. And just to illustrate how fast all these changes are happening, there were only about a dozen and a half states that in June of last year had economic nexus. And now what you're seeing is nearly every single state has it. This map actually needs some slight tweaking because in the last several weeks, Arizona, Ohio and Kansas have actually declared that they are going to implement economic nexus. And so the states are falling like dominoes. At a certain point, you're probably going to see all 45 states plus DC that have economic nexus legislation. So this isn't just California. This isn't just Texas. This isn't just Georgia. This is going to be more than likely a national sort of trend that you're seeing when it comes to sales tax. Okay. Now, once you identify where you need to register, you can see here that now finding the right tax rate is going to be incredibly challenging. So this is a nice little quilt of the U.S. and every different color is a different tax rate, and as you zoom in, the complexity just kind of rears its ugly head. So you've got a city of Denver, and within the city of Denver you've got Commerce City. Commerce City actually has some of the most complex tax determination rules in the country. So you can see here, you've got this neighborhood here. It's probably a nice little neighborhood in a suburb of Denver. But you've got next door neighbors that have different tax rates, right? Because it looks like one of them falls outside the city limits and is not subject to that 4.5% tax of Commerce City. Okay, so a lot of retailers, Avalara speaks with, are actually using, zip code rates, to charge sales tax, and these are just not accurate. As Bobby will attest, the zip code system was introduced in the 1960s for shipping efficiency. The acronym actually stands for Zone Improvement Plan. There is no connection to sales tax. Sales tax jurisdictions operate independently of the Postal Service. So if you're using zip code to determine tax rates, you're simply doing it wrong. In a flat rate state, you might be doing it right because there's one rate across the entire state, but in about 2/3 of the time, you're going to actually be charging incorrect tax. In this example, Commerce City here that we've zoomed in on, if you zoom out a little bit, you can actually see that there are 5 different tax rates within the zip code of within Commerce City. So very important to get right, very difficult to get right. We talked about the thousands of jurisdictions, but important nonetheless. Now, within a given jurisdiction, you can have not just a single rate, but you can have different taxability rules around different products and services. So New York's always a fun example. New York obviously is a fashion capital, and thus their government has declared some funny rules around apparel and footwear and things people wear in general. So you can see here that I'm not going to go through every single example, but depending on what the clothing is used for, whether it's depending on what type of cap it is, or shoulder pads or helmets, right? You might have different tax rates and rules around different items. Okay, so very important to identify that you don't just have a single rate within a jurisdiction, but you can have multiple rates within a jurisdiction, which is how we arrive at that 35,000 tax rates figure. Okay. Now, to talk a little bit about delivery and returns, I'll hand it back to Bobby.
Thanks, Jake. I think I'm still thinking about how you can tax a shoulder pad, but that's the first I've ever heard of it. But yeah, let's get down to something that's close to my heart is getting delivery and returns right for your US customer. And as with anything, when you're selling goods abroad, you need to be thinking about how you can localize it so that it's relevant to the customers in those markets. So tailoring delivery for the US customer. It's interesting that 89% of US consumers would consider a 2-day service as fast, but actually when you think about the size of the country, it's not that surprising. But 64% of them expect to have delivery for free, and many consumers are used to having what we call deferred delivery. What's important when you're thinking about what delivery options you want to be offering to your US customer is actually making sure that you're offering them the broadest range of options possible. Because what's important from a delivery experience is that customers are looking for convenience, which ultimately means choice. So you need to be thinking about offering them choice of whether it's a PO box, a postal box, APO delivery, whatever, speed, whether it's express, 1 to 2 days or 8 days, and obviously choice of price points as well. You need to be looking for a delivery partner that you're going to be able to rely on, who's going to be able to give you advice on what localized delivery means for the US. More importantly, that you can be confident that they've got the right expertise and knowledge for customs clearance to ensure that that your parcels are not going to get stuck in customs. That they're able to offer you a choice of carrier services, so not just offering you one carrier but multi-carrier, so that you can be looking at where you can get the best price and the best service. And there are other things to be thinking about, but one thing that is very important, which isn't just applicable to US customers, but any customer that is abroad, is that you must provide them with tracking and visibility. When you're buying from somebody that is from a seller that's not in your country, you need to be providing them with reassurance. So giving them the ability to be able to see, go online and track where their order is, send them regular notifications. All these things are going to give them the reassurance that they're looking for, that their order is on its way. And similarly, if they want to send something back, you need to be offering the same kind of tracking, visibility, and choice and convenience when it comes to returns as well. So you've got your parcel through customs, but then you've got that really critical last piece, which is what we call the final mile delivery. And that's really important, where the customer experience, you're either going to make or break it. From our experience for the US, you don't really need to look much further than the US Postal Service. And we say that confidently because on average, the US Postal Service, they are processing over 20 million mail pieces a day. They deal with more than 120,000 address changes each day. And each day they are managing almost 190 million pieces of first class mail a day. And what's also important to think about is that almost 14% of the US population will move at least once within 4 years. So it's important that you do have a carrier that is, a courier or a carrier for that final mile that is very used to dealing with high turnover and changes when it comes to addresses. Getting through US customs. What is it that you need to be able to provide here? And really the key takeaway on this slide is around having accurate and complete data. So as a seller, be sure to understand what are your obligations when it comes to the type of information that you need to be providing when you're exporting goods outside of the EU, outside of the UK. Also, declaring zero generic values of, say, £10 can cause delay at UK customs. So don't try to sort of fudge it by giving a sort of generic value or lowball it, because all that's going to happen is that on arrival in the destination country, in extreme cases, those goods may even be seized. Possible implications of having inaccuracies in the data provided or incomplete data being provided is the obvious things, you could be subject to tax violations, and more importantly, that important parcel for your customer is going to get held up and delayed, and that's not great for customer service.
And just to add to what you're saying there, Bobby, one point I wanted to make is that you put a good example up there in the FDA, and just for a little context around that, CBP is only one organization that you have to deal with to get your goods into the U.S. Depending on what you're selling, you might be dealing with the FDA or the U.S. Department of Agriculture or the ATF, which is Alcohol, Tobacco, and Firearms. I mean, there are almost a dozen different government agencies that oversee imports in addition to CBP. Okay, and particularly if you're importing goods from a country like China, which currently with some of the trade war that's going on with the U.S. and China, some goods are now restricted or are subject to higher tariffs. So. Very important to have thorough documentation and ensure that you've classified everything correctly.
That's right. And continuing with the FDA, it's not just, as you say, Jake, very important to have the complete and accurate documentation, but also be aware of what are the items that are either prohibited or restricted on their list. So, live animals, food products, there's a whole host of things. So again, make sure that you are fully informed as to what those items are that are going to be restricted or prohibited, so that you can avoid unnecessary delays and bad customer experience for your customers. Labeling is really important for your parcel, okay, not only for the obvious reasons. Make sure that you've got complete and accurate recipient's address with the zip code for them, but also a return address on the label and a tracking code, the barcode, which is what's going to be used for tracking purposes. Packaging. I know that we've been focused on how do you get your parcel delivered to your customer and back again, but this is about the customer experience. And remember that that package, that parcel is going to be handled so many times, it's going to go through so many checkpoints. Make sure that the packaging is strong. What you don't want is for a parcel to arrive and the packaging is damaged, because again, that's not great for your customer experience. It's interesting that in a recent IMRG survey that was across over 2,000 consumer households, one of the things that was the highest reason for cart abandonment was delivery. But what was really interesting is the information that more and more your customers are looking at returns policies before they make that final purchase decision. So think about what return services you're going to be offering to your US customer, because similarly what they want is the choice of returns options and services so that they can look for a return service which is going to be convenient, but also a service whereby you can give them transparency and confidence of where that return is in the returns journey. Some of the options you could be looking at, again, you've got slow and fast services, collect services, or services where your customer can go and drop a parcel off somewhere. It's important to offer returns to customers to a local address, especially for the US. Offer a US returns address where orders are consolidated so that it's easier for your customer, but also more importantly, it's more cost effective for you to return them to the UK.
Yeah, now we're gonna go through some key takeaways. As we wrap up this presentation, I'll kick things off. Now, again, if there's anything you remember from this webinar, it's going to be to evaluate what your activity is. That's the number one thing that will trigger tax obligation is economic activity or physical activity in the U.S. So, what kind of sales are you making in the U.S.? Are you breaching those economic nexus thresholds? Do you have a physical presence? Do you have a warehouse, whether it's through an Amazon or another partner? Do you have remote employees? They might be contractors, they might be full-time, they might be referral partners, right? What sort of relationships do you have in the U.S.? Do you travel there? Do you, excluding holiday trips, do you go to conferences in places like Miami and New York? I mean, that's where a lot of retail shows are. How long are you there for? Is it a day? Is it a week? Depending on the state, they might give you some leeway if you're only there for 24 hours, but some states don't. So important to identify what your activity is and how it impacts your tax registration requirement. If you do have an obligation to register for state sales tax in 1 or 10 or 40 states, then get registered. Make sure you're proactive and not reactive. The last thing you want to do is get audited. Ensure that you're charging the right taxes after you're registered, and that you're filing all of those tax returns correctly. I mean, the easy part is that all of these tax returns are in English, and that's pretty much the only thing that's easy about them. You've got to declare sales by city in some states, not just the aggregate sales for the state. So make sure that you're doing the ongoing returns correctly. And just to go back to this audit point, outsource as much as you can. Find tools to decrease the effort you put into monthly compliance. The more sort of human involvement a tax return has, or tax compliance in general has, the more you open yourself up to audit risk, okay, and the risk that you'll get it wrong. So find automation tools out there. The average audit, the median audit was about $50,000 last year. So, if you're just getting into the U.S., just starting out in the U.S., that might be your annual sales, right? And then the last thing you want to do is kick things off in the U.S. and all of a sudden get a letter from one of the state governments, the state departments of revenue. So, once you've identified your initial exposure, monitor the ongoing activity. Are you going to be hiring people in the U.S., sending sales reps out to maybe wholesale partners, or open up a retail store, meeting with clients and vendors and things. All of that sort of business activity that you might do on an ongoing basis, can in fact trigger what your tax exposure is. So if I'm going to leave you with anything, it's just evaluate your activity and continue to evaluate your activity. So Bobby, did you want to have some
Thanks, Jake. What I'd like to leave the guys with when thinking about delivery and returns really fundamentally is make sure that you're giving your consumers choice of delivery and returns options. That's really important because you need to allow them to pick what is most convenient for them. Make sure those options are localized so it's relevant, it's what US customers prefer, and ensure that whatever option they're picking, whether it's slow or fast, whether it's on the way that the parcel is being delivered to them, or whether it's en route for when they're sending a parcel back to you as a return, make sure they have a way of being able to track and know at any point in time where that parcel is and that you're pushing out notifications for them. Offering a variety of different services is really important, but they need to be tracked. And when we think about the US, tracked services using one entry point, i.e. JFK, can become congested in peak or extreme weather. So it's important to ensure that tracked postal services have multiple entry points to the continent, and ensure that your information such as commodity codes, country of manufacture, etc. correct, so it's not going to create any transit delays. And look to utilize paperless trade. It's another area where automation is not just going to reduce inaccuracies of data, but also efficiencies. So paperless trade is going to help you make it more likely that you're not going to make mistakes in providing customs information and avoid unnecessary delays due to things like lost paperwork. And that's it really when it comes to delivery and returns, Jacob. I think we've more or less covered everything that we have to cover.
Yeah, I think we did. Yeah.
Yeah.
So we've had a couple of questions come in. We're going to do a quick Q&A here. So the first question we have is, I sell through Amazon. I hold inventory in their California warehouse. I am below the thresholds you talked about earlier. Am I okay? Well, so this is a good question. So when you hold inventory in a state, most of the time it's the number of transactions you have or the amount of revenue you have in that state is irrelevant. Because you breach one of you trigger nexus by one of the older definitions. So very important here to understand that the Wayfair ruling didn't actually replace any legislation. It simply added to the list of activities that can trigger nexus in a state. So if you hold inventory in California, but you have $5,000 in sales, you are well below the threshold there. But because you hold inventory there, you have a physical presence, and thus you need to register for California sales tax. So yeah, again, very important to understand. The Wayfair ruling didn't replace anything; it simply added to the list. Another question just came in. We sell software to businesses. It is a SaaS product. We are not registered in the U.S. What do we need to do? Well, depending on where you're selling, right? So if you have breached a threshold, if you send sales reps out to a state to visit clients or attend conferences, that sort of activity can trigger a tax obligation. If you do none of that and you haven't breached any thresholds, just look into in which states your customers are. There are a handful of states, Texas, New Mexico, Hawaii, that say that if you license software into their state, then depending on how the software is delivered, it can trigger a tax obligation in and of itself. Texas is notoriously aggressive about this, so just keep that in mind. That the product itself can trigger a tax obligation, regardless of whether you have a physical presence in the traditional sense, or if you've breached a threshold. So just look into that. I'd recommend chatting with a tax advisor to clarify any of that. But software can be a tricky thing in the U.S. Bobby, I think the next one's for you.
So here's a great question from a company that is selling cosmetics online. What can we ship to the USA and what can't we ship? So what you can ship, products or articles that are intended to be rubbed, poured, sprinkled, sprayed on, applied to the human body for cleansing or beautifying, that promote attractiveness, such as skin moisturizers, lipsticks, iron facial, makeup preparations, cleansing shampoos, and also substances that could be a component of a cosmetic product. Those you can ship. Where it gets difficult are products that could be seen as a drug or regulated as a drug in the USA. So those are items that could be intended for diagnosis, for cure, mitigation, treatment or prevention of disease, or articles intended to affect the structure or function of the body. That could include things as simple as anti-dandruff shampoo, fluoride toothpaste, antiperspirant deodorants, and even moisturizers and makeup containing sun protections.
Okay, I think we're going to have to end it here now, Jake, because we've actually run out of time. If there are any questions that we haven't answered, then we will get back to you on email. Don't forget that look out for the email that's coming out tomorrow. You'll have a link so that you can download the webinar. And of course, if you've got any other questions, then you've got our details here on the screen and on the resource site. Thank you, everyone, for your time. It's a wrap up from me.
Yeah, thank you, everybody, and thank you, Bobby, for helping run this today. It's been very informative for myself, and I'm sure everyone else has found it useful as well.
Great. We look forward to the next one. Thanks, guys. Bye.
Ciao.